to the program. Let's continue the conversation. The relaunch of Nigeria's Interbank FX market, live here from FMDQ OTC Securities Exchange, downtown Lagos. We're here for the next 1 hour. We're here in the afternoon, all through 5 o'clock in the evening, bringing you up to speed. All the trades as they're coming in, as well as the price and the volume that will be coming through the Nigeria's new Interbank FX market. This is the spot market. We're starting with today, and this is where we're going live from here for you. And this is the first trade that is coming through via the Thomson Reuters FX tracker. It's called the TRFXT. I got an acronym right. That's the Thomson Reuters. And what you have here at about 10 minutes past 9 o'clock in the morning, of course, that's the GMT. Thomson's based in the UK, and that's where it's coming from. Just as 10 minutes past 10 Nigerian time. So if you see 09 here, that means 9 o'clock London time, 10 o'clock Nigerian time. So this was 10 minutes past 10, with about close to 20 minutes. It was about 10 minutes ago transaction here. The last you see here is 255 naira, $390,000 was the volume. $390,000 is what you find here, and at 255 naira to the dollar. That's the first trade that we see there. That if you look at the volume sign here, the volume is 0.39, and that's $390,000. We'll keep tracking this for you as we go on, and of course we'll get to the fixed income market, bonds and treasury bills as we move on to the rest of the day. But let's check through some conversations here. Let's talk to Kaudi Ugoji, who is the Vice President in charge of strategy and corporate services at FMDQ, our host here today here at their headquarters in Lagos, to have a bit more of conversation, giving us some insight into the new flexible FX policy guidelines of the central bank. That is what we're starting with now. Kaudi, let's have this conversation. Good morning. Thank you very much.
Good morning, boss.
Okay, now let's take us through back a little bit. Let's recap a little bit what the steps that we've taken so far to this point in time.
Like you spoke about when you were looking at the chronology, about 15 months ago, the Central Bank of Nigeria introduced the fixed rate. The fixed rate FX system, FX regime, where they had auctions in the market on a daily basis to try to meet the demand of the market. What was happening at that point was quite a bit of the demand couldn't be met in the market, so you were finding that this demand was being channeled to the parallel market, and causing the demand on the parallel market, of course, was causing the rates to hike. Down 15 months later, the CBN has come up with this flexible regime, which is a very bold move, as you can see from all the analysts, international and local, have said. And what this does basically is to say we're going to have the market determine the rates as opposed to having it fixed. So what has happened is the CBN has released the guidelines for the operation of this market. And in that guideline, there were a couple of key things that were highlighted in there that would help, the market to thrive. The aim of this is basically to build and, develop a liquid and transparent Nigerian FX market. One of the things that we would see in the guideline, for instance, is that we would have one single market, a single market structure. So there will no longer be any CBN auctions. The interbank autonomous market is where all the trades would happen. Basically, that's a single market that's a single market now.
May I interject quickly? Interbank FX market is not entirely new to Nigeria, so this is not really new, as it were.
No, it's not new. Actually, what is happening today is actually a relaunch, a reintroduction. Because like I said, before 15 months, this was happening. So it's just going back to what has been existing. So it's not new. It's just a new regime coming from the last 15 months, basically.
What makes it different this time around? Is it because of the dealers? Is it because of the rates? Is it because of the central bank position in the market?
Basically, and those are the features, or those are the things in the guideline that help to define. So, for instance, like you said, in this case, you now have authorized, you now have primary dealers, FX primary dealers. What the market currently has is authorized dealers, which are the banks, which are authorized by the central bank to deal in FX. But what the CBN is doing now is to say they've appointed 15 banks to stand as the primary dealers for the FX market, basically, and they would sort of act as intermediaries between the central bank and the authorized dealers. So the central bank would sell directly or buy directly or deal directly with these primary dealers, and they would then supply to the market. So that's now the flow. So there's this layer of dealers that have been introduced into the market. Another thing is, like I said, there would no longer be any auctions from the central bank. The central bank instead would intervene directly into the interbank market. So the central bank would act as an intervention participant. They would actually trade, buy and sell from the dealers with the using the two-way quote system. So the central bank can, in this case, be seen as any other dealer buying and selling from that market as well. And then you also find that in the guidelines, one new thing again that came up was the futures, the Naira settled OTCFX futures. So now previously the older guidelines had allowed for other derivative products, forwards, options, swaps, but the futures is one new thing that has been brought into the market that would be launched in next week, Monday, actually.
Are we taking out the forward fixings? Or they've just been renamed as futures?
Oh, no. The forward still remains. So right now we would have forwards, futures, options, and swaps.
So the derivatives, the basket of derivatives,
yes,
would be next week. So we're looking at that ahead. So let's come back to today. We're doing the spot market today, is it?
Yes.
So what I'm seeing here, what's coming in through here, is the what you call the spot market.
Yes. This is the spot trade. These are the executed deals. Asset now.
Asset now.
Executed.
So if I'm looking at this, if I'm looking at this here, Kaudi, let's go through this together. What I'm seeing here is what you can call what the market is opening with about looking at about 390,000 trades. That's not so much.
The actual trade was about $1 million. I'm not sure what's coming up there, but I looked back end and the actual.
I'm going to get used to these.
The actual trade is it's 1 million. So that's the first trade, and the trade was executed at 255 to the dollar.
To the
yes,
dollar.
Correct.
So this is where we're looking at how things are coming through. Now this looks a little bit slow. Is that expected?
That's to be expected. This is the first day everyone is coming back into the market after 15 months. The dealers would want to, watch and get used to what's, to get used to what's going on in the market again. At this point, I won't say that nothing is happening, because I'm sure that the dealers are actually interacting with each other. What you would see here would be executed trades. So it doesn't mean that the dealers are not actually putting in bids and offers. It just means that just one has been executed.
Okay. In terms of margin.
In terms of margin. So a buy and a sale has happened.
Yes. So you have a consummated deal. And what we have is what's been consummated at 255. Considering where we were coming from in terms of the street rate for the Naira, this doesn't look too bad to start with.
It looks good. It looks good.
Not too bad way to start.
No, not a bad way to start.
If you consider the fact that until this morning, a fixed rate for the Naira at the official window was 199.
And I mean, I think you've said it. It was a fixed rate. It wasn't a market-determined rate. So it would be comparing apples and pears if we compared this to that rate. So the truth is, that rate was pegged, and so it wasn't really determining it wasn't really determined by what the market or where the market really was. This in itself is determined by the market, by what the buyers are willing to buy at and what the sellers are willing to sell at. So it would be a bit tough to say if you compared, it wasn't doing good. I think 255 is a good place to start. I mean, I'm also looking forward to seeing what the day would go, and in fact, more interestingly, what the week would look like, because like you said, it's expected to start slow, but it will pick up because everyone is excited about this development, and everyone is, I know that the dealers are willing to participate in it. So I guess we'll watch it over the week, and we'll see how it progresses.
One of the main concerns, Kaodi, one of the main concerns out there on the street was the volume of the arrears, the sitting on the books, and how this will taper off over time.
Correct.
Because everybody around the world is watching right now what's going on. Can you talk to that a little bit? How do you see this pacing out?
Okay, so there's a backlog of about $5 billion, about $5 billion. And one of the things that the guideline has pointed out is the central bank is not expected to clear this backlog. They will intervene in the market when necessary to provide liquidity to the market, but the markets in their buying and selling will begin to clear this backlog slowly. So we're not expecting that the CBN would pump in $5 billion today to clear the market, no. But it will be a gradual process.
Do we have any idea how much the central bank will pump in today? Perhaps half a billion?
I wish I knew, but unfortunately we're both here, so I can't say. But I'm hoping that as the day progresses, if the CBN does decide to intervene today, we'll see that. And we'll be able to talk about that sometime later in the day. So we're watching and we're hoping, and we'll see what would happen. So I think it's a good thing that you're here and you have a day here, and you can really see how the market progresses. So
you said to see the market. This is the day to be here with a little bit cozy with this. Terminals here to track everything. Thank you very much. We're going to talk to you, get more information from you as we go on from here, as you host Channels Television here for this very important relaunch of the Interbank FX market. Kaudi Ugoji, thank you very much. We appreciate it. Just stick around for about a minute. Let me take this back there before I let you go. But again, we've got about 2 minutes more to start together before we go on a quick break. But again, if you come back to this, viewers, this is what we've been talking about. 2 terminals, Bloomberg terminal, the Reuters, Thomson Reuters for the FX. This is where you find the consummated deals. Again, the back end of what you see here is where the banks are doing what we call the interbank trade. So between among themselves, the bid and ask and all the quotes are coming through on a separate system. But what we're showing you here is what is being made. In other words, deals signed or consummated between a trader and another one, between one primary dealer and the other one. And of course, the central bank sitting down there in Abuja, Godwin Emefiele and the rest of his team, the big brother watching everything that is going on today, the day 26 years after Nigeria throwing a new twist into the entire interbank FX market, make the Naira flexible, to use another word on the street, float the Naira, as it were, place it a little bit like this and see where the market drives it. So that is what you see here today. We're around 255 Naira to the dollar.